Note: the views expressed in this podcast do not necessarily reflect those of Three Gimbals. Hey everyone, welcome back to Navigating in Balance, a podcast by Three Gimbals, where we dive into the global intersections of security, strategy, and emerging influence. I'm your host, Benjamin Butler, and today we're going to be turning our attention to Latin America in an episode called Oil, Dams, and Debt, the China-Ecuador Equation. So obviously here we're going to be shifting our focus a little bit to Ecuador, where China's growing economic footprint has started to generate a lot of friction. So from things like hydroelectric dams and highways to deep sea ports and surveillance systems, China's infrastructure projects, once hailed as transformational, are now raising quite a bit of alarm across strategic, economic, and environmental fronts. So joining me today are three of the most respected voices on Chinese influence in the Western Hemisphere. With me today are Leland Lazarus. He's an Associate Director of National Security at the Jack D. Gordon Institute at Florida International University and an expert on China-Latin America relations. Leland has served as a U.S. diplomat in the region. He was a special assistant to two combatant commanders of U.S. Southern Command, as well as the Deputy Public Affairs Officer at the U.S. Embassy Barbados in Eastern Caribbean. I'd also like to introduce y'all to Martin Brown. He's a junior open source analyst, as well as manager of FIU Security Research Hub's database on Chinese activities within Latin America and the Caribbean. And Leonie Diaz, an ICCAE National Security Studies certificate student in the Jack D. Gordon Institute for Public Policy at FIU, who has an experience as an intern at the Honorary Consulate of Belize in Miami and as a congressional intern in the U.S. House of Representatives. So, Leland, Martin, Leonie, thank you all for joining me today.
Thanks for having us.
Yeah, of course. And, before we get rolling with this, Leonie, I know you're briefing a pretty high up audience next week, right? So tell us some about what you're doing with that.
Yeah, so next week I will be briefing State Department's Overseas Security Council Latin American Committee. We as an institution, Florida International University, are hosting them and their conference on April 8th, and I will be briefing them on the research that I have conducted this year about the People's Republic of China, or the PRC's foreign direct investments that they are conducting in Ecuador, and the implications those investments have in regards to the labor force of Ecuador, and overall what are the implications for the U.S. companies who operate in Ecuador. While the scope will remain on Ecuador, I think my project can also be used to analyze the broader trend that's happening in Latin America regarding PRC projects and the host country's workforce.
Wow. Well, that's fascinating, and I think that will be the perfect segue into what we're going to be talking about today with Ecuador. So let's just start with the big picture here. So, Leland, from your perspective, what drew China to Ecuador in the first place, and what makes Ecuador strategically attractive to Beijing?
Well, I think before we even talk about the China-Ecuador relationship, we gotta talk about how it's really a microcosm of a larger trend that we've seen over the past decade. And of course, that is the Belt and Road Initiative that was started in 2013. Since then, there are now 22 countries in Latin America and the Caribbean that are part of the Belt and Road Initiative. Panama may be one less in a couple of months, maybe
Right.
we get down to 21. But really, over the past 2 decades, we've seen a massive increase in Chinese engagement in Latin America and the Caribbean. Just to give you a sense of that, in 2021, trade between China and the region was just $18 billion. You
Oh,
fast
wow.
forward to last year, and it's upwards of 400 and sometimes $450 billion, right? And
Right.
that trade has expanded to well beyond just commodities to include infrastructure projects, renewable energy projects, and so on and so forth. And so Ecuador is, of course, one of those key countries that have really benefited from various Chinese BRI projects, especially under the administration of Rafael Correa, and that was from 2007 to 2017. He, of course, was considered a left-leaning leader, and so he was seen very much by the Chinese themselves, but other leaders around the region, that he was more amenable to working with communist China, right? Him having ideological similarities. but he was also seen as a quite a corrupt leader. And so what you see is a lot of shady deals that what we see now are all messed up. A lot of those deals actually started under the administration of Correa.
Wow. Well, thank you for the background explanation on that. And I think, looking at China's continued evolution in the region and how they've continued to partner with more and more of these nations, increase in both quantity and amount, honestly, of trade. If we're boiling it down to yen or a dollar, it's shocking, frankly, to see that, especially, with some of these countries being our neighbors. So that's actually a perfect transition. Digging into more of the high-profile infrastructure cases that you had mentioned, some of these projects going wrong, and how some of these shady deals are no longer essentially functioning as intended. Probably one of the most infamous of those is the Coca Codo Sinclair hydroelectric dam. So that was supposed to be a crown jewel of energy independence. What went wrong?
Well, to really give background first on the Coca Codo Sinclair Dam, it was first proposed by the Ecuadorian government in 1976, right? But construction didn't start until 2010 after Ecuador secured a $1.68 billion deal from China's Export-Import Bank, and it was constructed by Sino-Hydro. But what really went wrong was the fact that it was built near a active volcano, leading to over 7,500 cracks in the facility itself. And during and post-construction, Sino-Hydro faced 14 civil lawsuits and 80 labor claims. And currently, the dam only functions at 59% capacity, which its overall production capacity is 1,500 megawatts and accounts for 35% of the Ecuadorian electricity grid. So this is due to the droughts occurring the Coca River and also environmental erosion around the region. But also, last thing regarding this project is that it has deep entanglements of corruption as well, with nearly every top Ecuadorian official involved being either in prison or sentenced on bribery charges.
Oh, wow. Okay, so it runs deeper than just one layer. There's a lot going on here to unpack. So the dam is producing power, but there's been all sorts of issues with both on the corruption side, environmental side. Is there a risk that this kind of infrastructure project, rife with problems, becomes a pattern? Are there any other projects in Ecuador with similar warning signs? Feels like we're really kind of seeing a short-term, long-term cost-benefit scenario playing out in real time. Liani?
Yes, to add in on the dam, I think something that went wrong that I found in my research regarding the relationship between the dam and the labor is that the majority of the people working in the high-skilled roles, the administrative and the managers, are Chinese nationals, which the PRC is essentially importing from China rather than hiring the Ecuadorians. The Ecuadorians that we do see in high-skilled jobs, it has been reported that they feel like the Chinese nationals have created an environment where they are supposed to be treated as socially superior than the local Ecuadorians who work in the dam. In fact, there was a researcher who stayed at the dam and interviewed local Ecuadorians, and the common consensus was that they didn't feel close relationships with the Chinese nationals, and the Chinese nationals did their own thing. And I think that's something that Ecuador did not expect. And we're seeing this also in the Prasaja port that's happening also in the similar employment data, where the majority of the people who work at the port are Chinese nationals, similarly in similar high-skilled jobs, and the majority of the Ecuadorians work during the construction phase of the dam. And I think that's what Ecuador and most host countries see from PRC projects, is that they're seeing employment opportunities for their own workers, but when it comes into fruition, the majority of the jobs available to the local workers are in the manual and low-skilled sector, and the Chinese nationals have the opportunity to just run the dam as they see without giving Ecuador the promise that they expected.
Got it. Okay, so what you're seeing is, China comes in, promises, hey, we're going to provide employment opportunities, countries will sign these deals thinking that, hey, this is going to be a good opportunity for our citizens to advance, to learn, to grow our own understanding, like our own technological and infrastructural development, but they're getting stuck with jobs that are not in premier positions within these projects.
Absolutely. We're not seeing skill growth, we're not seeing skill transfer, and I think that affects the entire labor force in general. And when US companies come to Ecuador to hire for their own businesses, we're seeing a high-skilled sector that isn't being benefited from the PRC projects in the area.
Understood. Gotcha. So kind of shifting gears a little bit, when we're talking about money, how are these deals functioning financially? So is it China lending Ecuador money in exchange for oil rights? Are these deals being backed by resources? What's kind of the trend that we're seeing here?
Well, to add really on Liani and your question, the Chinese have financed or built or are operating 8 different energy sites in Ecuador currently, all facing malpractices, 3 of which are on rivers currently facing severe droughts, the Mazar, the Pinling, and the Coca River. And these projects are usually financed by state-owned banks like the Export-Import Bank. You have a case like the Sopladora hydroelectric plant on the Mazar River, where although it's owned by Ecuador's company Hydroelectric, it was constructed by China Hetsabo Group, which started operations in 2016. And the total cost of the facility was $500 million, with 85% of it being financed by the Export-Import Bank of China. And the plant, as of today, only runs at 16% capacity due to the droughts on the river. And this site also has issues that Liani was talking about earlier regarding its workforce, where it has an 8-to-2 ratio Ecuadorian to PRC. So for every 8 Ecuadorian workers are 2 PRC, with the PRC workers holding the higher paying and more critical roles.
Wow. So, yeah, how sustainable is this model? So with the function of the droughts, with all these issues, is there a course of action? Is there political pushback within Ecuador, within this new administration? Or is it the type of thing where people are keeping their mouths shut because of all the benefits or promises?
Well, first and foremost, before answering that question, I did just want to add
Please.
a little bit more. You mentioned about how is all these things being funded, right? And I think you specifically wanted to learn a little bit about the loan for oil or debt for oil agreement, right?
Yes.
And this was an arrangement, again, by the Correa administration, where they would receive loans from China and then repay those loans in the amount of oil that they would sell over to China at a really subsidized rate. The problem with that sort of debt for oil arrangement was that it froze the price of the oil well below market level. And so for years, or even today, the oil that Ecuador still sells over to China, they're losing a lot of money on that oil, right?
Right.
I think almost to the tune of $5 billion that the Ecuadorian government has lost over the past few years.
Wow.
Now, to your question about what is the current administration under Daniel Noboa, what is he doing about it? And I think it goes to a larger thing of what Liani had just mentioned, which is trying to get Chinese companies to work in a higher standard, right?
Mm-hmm.
I think various Chinese companies have realized over the past decade that many of the practices that characterized Belt and Road initiatives, right? Whether using the mass majority of Chinese labor, only using Chinese labor in the management and high level skilled positions, giving a bunch of loans to countries that after a decade or so they won't be able to pay it back, that those kinds of practices are actually unsustainable in the long run. And so what you're actually seeing is 2 things. One is the local governments kind of calling for more accountability, right, for newer projects. And then on the Chinese side, that there's also been a little bit of change where they'll maybe add a quota, make sure there's a certain quota of local labor as opposed to Chinese labor. Or you're even seeing a larger shift of the Belt and Road Initiative writ large, where they're no longer going to focus solely on these big mega projects. The mega project like the Port of Chancay in Peru.
Sure.
Everybody heard about, it was inaugurated November of last year. That may be the last vestiges of something like that.
Sure.
Now you're going to see something that Xi Jinping likes to call Xiao'ermei, which is smaller but more beautiful, right? Projects that are more focused on renewable energy, electric vehicle batteries, and electric vehicle plants focused on critical minerals like lithium and copper and others. So I think that's the kind of trend that you'll be seeing on both the local side and on the Chinese side.
Gotcha. No, thank you. That makes sense. I recall a trip that I was on fairly recently where I visited the Bahamas and I got off at the port. I was on a cruise ship and there was a Chinese investment bank probably no more than a mile from the port site that I remember driving past, and all sorts of signs. There were BYD dealerships for electric cars. So I definitely can kind of piece together a little bit of that, of maybe what that strategy would start looking like. On that note, though, kind of mentioning how China's moving away from some of these gigantic infrastructure projects in the name of maybe a different approach. There's a bit of a growing concern about China's digital infrastructure footprint in Ecuador, but also in many other places, Ecuador being the prime example here. So from surveillance systems to telecom, how deep does this penetration go?
Well, I know, Martin, you actually wrote an op-ed about Chinese engagement in Chile,
Did
and then also Lima.
Yes, yeah. But speaking right about Ecuador specifically regarding Huawei's presence through telecommunications, we found many different cases of this, but one of the most notable ones is 19 Huawei's partnership with Ecuador's own local news agency called the Corporación Nacional de Telecomunicación, okay, where they launched its 5G network with Huawei in July 2019. And, this partnership really represented deep technological ties, as Huawei is now a major player in the 5G network of Ecuador. And once 5G networks are embedded in the regions, they're difficult, near impossible to reverse, displace, replace them. So although technology may outlast political shifts, it creates a large risk to the future government using its surveillance for control. So yeah, definitely a bigger push on legal safeguards to protect data sovereignty and civil liberties are something that needs to be looked at in Ecuador.
Gotcha.
And I think the larger issue here is, listen, from various Latin American countries, they're thinking we need to provide digital connectivity to our people, right? Because in this day and age, you need access to internet, even if you're in a rural area, it's a human right, right?
Sure.
And quite frankly, 5G service from a Nokia and an Ericsson are way too cost prohibitive, right? And so Huawei has been providing pretty good services for a pretty good price. Obviously, the problem with that is, you peel the onion back a little bit more and you realize that China's two laws, the 2017 National Security Law and then the 2019 National Intelligence Law, requires every single Chinese entity, whether you're a private company or a state-owned enterprise, to give data, user data to the PRC, especially in the context of national security. That, of course, includes Huawei, right, whose CEO Ren Zhengfei used to work as a PLA military officer, right? So that's the concern. It's hard to make that national security argument to various countries in Latin America and the Caribbean, and also in the larger global South, who need, digital connectivity now.
Right. No, I mean, I was reading the other day, it was a rural American wireless provider. I think it was Viera Wireless, and I grew up in not rural Kansas, but I grew up around a lot of rural Kansas, and I remember driving through the state and seeing all sorts of signs for Viera, and it turns out that most of Viera's network is Huawei based essentially hardware. So now, trying to remove that has been a painstaking process, and it's one that still is nowhere near complete. So it's the whole trade-off between, on the one hand, a lot of these countries aren't in a position to turn down a far more affordable 5G service, but at the same time, you're risking massive data, well, not even leaks, but data access to the Chinese government, the PRC. So No, that's really interesting. And I'm sure there's, concerns as well, not just with data collection, but also influence and how influence grows through infrastructure. So how these Chinese investments are influencing political decisions or influencing kind of social decisions made by governments. Have we seen any evidence of that up to this point?
We've definitely seen, evidence of regional echoes throughout Latin America with this certain types of engagements by the PRC in critical infrastructure. As Leland mentioned earlier, I have written a paper also on Chile looking at their case study regarding critical infrastructure investments by the Chinese, and a lot throughout Latin America. Actually, the strategy by the Chinese really was fueled from financial crises like 2018 and COVID-19, because it caused for many European and American companies already investing into the region to have to back out from their projects or their investments, because honestly, it became a money pit for a lot of these countries. Separate Energy came out, a U.S.-based company, and they came out and they sold all their assets in Chile for $2.23 billion in 2018, because they need to refocus on U.S. energy, because literally they were spending too much money in Latin America and it didn't have return on investment. And because of this, China now owns 2/3 of Chile's energy market through just basically acquisitions of multiple different companies originating in different countries. And also, China, engages in the mining sector a lot, and they did the same thing. They were basically waiting out. And now also in Chile, the Chinese import, or the main importers of 74.1% of Chile's copper and 72% of its lithium supply. So it's just something that definitely needs to be looked at regarding financial crises, because it was the PRC strategy to basically wait for them to become open biddings and just put multiple companies on the bidding for them.
Gotcha. And Liani, going back to you, so bringing it back full circle to close, where do you see Ecuador going from here in terms of its strategy moving forward? If you could speak a little bit, give us a little preview of maybe what you're going to be speaking about next week. What's kind of one of your main research takeaways that you've had that you're looking to share?
Yes, absolutely. I think that Ecuador has been one of the loudest countries in Latin America to speak on malpractice reports from PRC projects. I think the Ministry of Labor and the regional banks that do report on these malpractices have been much more overwhelming than we see in other countries. And I think Ecuador is in a position that they might be more willing to accept other foreign direct investments from other countries. And I think there's an opportunity for the U.S. private sector as well as the public sector to come in and invest in the local labor force, invest in skill transfer, and overall provide a better package for the Ecuadorian government and this administration than they reportedly have seen the Chinese do. So in terms of labor and skill development, I think that the Ecuador might be more available and more open to other foreign direct investments from other countries than they have been in the past.
No, it certainly sounds like that. Thank you very much for sharing. Certainly sounds promising, maybe the direction things are going. With that said, Leland, Liani, and Martin, thank you very, very much for joining me today. The depth of your insight's been incredible. This has been a powerful case study on Ecuador and how things like infrastructure, finance, and influence all kind of converge, and how the tale of those decisions is really shaping the strategic insight and landscape for years to come. So there's many layers, but at a basic level, it's pretty clear that what's going on is, maybe tides are turning. But for those listening, this has been an episode of Navigating in Balance, a podcast by Three Gimbals. You can find this episode and more on Spotify, YouTube, and wherever you get your shows. But until next time, stay sharp, stay aware, keep navigating in balance. Thank you all very much.
Thank you.
Thank you.